Hey everyone, this is Judith and I am a licensed realtor here in Chicago and Northwest Indiana. If you have been thinking about investing in real estate and you want to know whether or not you should purchase your first property in an LLC or use your personal name, then this video is for you. Before I start this video, I want to preface that I am not an attorney or a CPA. I am simply giving advice based off of my experience as a realtor and investor. You should assess your personal situation and ultimately get advice from local experts in your area. I wanted to make this video because I get this question all the time. And you may be asking yourself as well whether or not you should purchase your first investment property under an LLC or if you should use your personal name. And while there are many benefits to starting an LLC and it may seem like the best option as a first-time investor, it usually isn't. If you are looking to purchase an investment property, especially as a first-time investor where you want a house hack, buy a duplex, live in one unit and rent out the other, even buying a single family home and living in there for a year and then ultimately getting another property, then you should use your personal name to purchase a property rather than an LLC. Even if you wanted to purchase an investment property with a partner like your husband or your girlfriend, then you can still use your personal names and just have both of your names listed on the loan. Most people don't really use LLCs until they maxed out of all their options and their only option is to use an LLC. Keep in mind that when you get a loan to purchase a property, that the mortgage lender is going to want to see all of the sources of income to qualify you and whoever else is going to be on the loan. And if you are using an LLC to purchase an investment property, then you might not even qualify because there may not even be any income that is being produced in the LLC. And even if your LLC is producing income, one of the major downfalls of using an LLC is that now the lender is going to treat that loan as a business loan. As a result, this means that you're most likely going to have a higher interest rate on the business loan versus a personal loan, which comes with lower interest rates. And then on top of that, most lenders require 20 to 25% down on a business loan as an investment property versus a personal loan where you're only going to be putting 3.5% to 10% down depending on which type of financing you're using. This is going to mean that you're going to have a higher monthly mortgage payment, which is ultimately going to affect your cash flow and mean that you're not going to have as much every single month in profit. Now, what I have seen some investors do is they will buy a duplex or a house and they'll live in the property for a year. And then when they purchase another investment property, they'll transfer ownership of that property from their personal name into an LLC using a quick claim deed. Now, keep in mind that most mortgage companies have what's called a due on sales clause. The due on sales clause basically says that if a mortgage company sees that there was a transfer of ownership without a refinance or without there being a sale, that they can call the mortgage due. So do speak with an attorney or your lender to see if this is something that is viable for you to do. But I do know that there are a lot of investors that I've come across that have done this and have had no implications and they haven't had any issues with doing that. Also keep in mind that when you purchase an investment property using an LLC, your insurance rate is going to be higher. When you start an LLC, you are no longer personally liable, which then increases the risks to the insurance company, which in turn means higher interest rates for you. What you can do instead is purchase an umbrella policy. I know many investors who have 3+ properties and have no LLC, and they just have a hefty umbrella policy to protect them of any liability issues that may arise. And just because you don't have the property under an LLC doesn't mean you shouldn't treat it like a business. You should ideally be keeping track of all of your finances related to that property separate from your personal expenses. You don't necessarily need a business account to do this, but you can definitely create a separate checking account to funnel in all of your expenses and revenue and keep track of everything in that one account. And don't worry, you don't need an LLC to claim any losses on that property or even claim depreciation. You can still do that without having an LLC. But you should speak to your CPA and get further guidance on what you should do. From what I have seen, most first-time investors utilize their personal name until X number of properties. An LLC is most likely suited for someone who has way too many properties where they can't even get anything under their name anymore, or their DTI is way too high, and then they have to use an LLC in that case. I personally have only purchased one property using an LLC, and that's because I purchased the property all cash. The rest of the properties that I've owned, I've used with my personal name using an FHA or conventional loan. The only other scenario that I can think of where using an LLC might be more beneficial for you is if you are getting a hard money loan. So if you want to get a hard money loan to flip or do a BRRRR on a property, then it's probably best suited to use an LLC in that case, because then you're no longer personally liable. And of course, there's always issues that come up with rehabbing properties. So in that case, I would recommend that you purchase the investment property using an LLC. I hope this information was helpful to you as a first or second or third time investor. And if you have any questions, please feel free to reach out. Again, if you have any more specific questions, I would reach out to an attorney. If you need an attorney, feel free to reach out, because I do work with a lot of attorneys as well. If this information was helpful to you as a first, second, or third time investor, and if you have any questions, please feel free to reach out. If you like this video, please like and or subscribe. I would greatly appreciate it.